Hello guys, Mariano from the Trading Parrot. It's been a long time I haven't seen so much division between bears and bulls. Many comments on this morning video talking about 77k doable, call it the previous week CME gap that's still open there. Many traders with the expectation that possibly we could fill that gap anytime. And then there's the second group of people that are quite bullish, thinking that we are just about to break out bullish and hit new highs. I want to talk about this, particularly making an emphasis on today, which is Friday. So we are about to enter the weekend. We're a couple of hours away to close the price on CME. And I'm not just going to put emphasis on the 4-hour and daily time frame today to see what TA is doing, but I'm also going to look into what the whales are doing. And I've got very interesting insights here on the bid versus ask ratio. And I'm sure you're going to appreciate these insights by the end of the day. Sure, the weekend is coming, low volatility, low volume is expected, but I think a trap is on the way, and as usual, we're gonna put our eyes on it and try to uncover it. Guys, if you like this type of content, make sure that you're subscribed to CoinViewer Trading. I put out 3 videos a week in the channel, but if you're a hardcore fan of Bitcoin and you cannot remove your eyes from the charts, then let me suggest you to subscribe as well to Trading Parrot, where I put out 2 to 3 videos a day covering Bitcoin, altcoins, indexes, and everything to do with technical analysis. Let's get into the content. The month of November has been an incredible rally. So far, we still have here a candle open with 20,000. And I think that did the trick to attract 75% of interest over time on Google Trends. You can see it here. It's still showing the dotted lines, but I'm pretty sure that whichever number we end up having by the end of November is going to be 2020 November looking like a joke. With mid-November with only 20 and closing November at 31.75 is more than what I could have ever imagined for November in terms of interest on Bitcoin from Google Trends at least. We have hit already extreme greed. You can see that yesterday we have 88 and today, thanks to some bearishness and some division among the traders, we have managed to go into 80. We've been during the week waiting and looking at the golden cell from servers. This is a free indicator that tracks the moves of stable coins into Bitcoin, and I have used extensively in the past 2 years. It used to be a paid indicator, but now it has become free on my website using the tier picnic. I am waiting for this golden cell to settle on Sunday. Of course, whichever move we have in the weekend might remove the signal if we see some extreme move as well. But typically, closing a golden cell tends to have some effect in the market. The only thing that could save the day is that we also have a golden cell in November in 2020. In that case, it only managed to move the price 13% down, which was pretty much nothing. And then the move resumed to the upside. Nothing compared to the golden cells that we were having in the bear market at 48k with drawdowns of 60%. And so far today, the whole conversation has been around the head and shoulders potentially completing. All we need is the price to ideally from right where we are come back down into 87k and complete the full shape and then break below the neckline at 87, heading back down. Whether it's going to be able to complete the full target or not, at least the high of the pattern points towards 79k, which is 2k less than what we need to fully complete filling the gap. You can see that CME in UK time closes at 9 p.m. today and currently is 8 p.m. so we still have 1 more hour. Probably when the video goes live, we will know at what price we close on CME, which is also relevant for the rest of the analysis tonight. But I think the most decisive part in here is the fact that right now we are pushing above the highs of the left shoulder, and depending on where and how high we close, we might invalidate the pattern. Of course, if we come back down in here and we continue going lower, we could also complete the pattern. And that's why I think today my Telegram channel has been with so many comments about this. And there's a lot of division in what people think is going to happen. Some people were asking me last week if my Telegram channel, Instagram or Twitter or YouTube were paid. Nothing is paid. Just watch any of my videos in YouTube in the Trading Parrot channel. Look into the description. and in the social area you're gonna find all the official links. Just make sure you never engage in private messages with me, because if you do, you're probably talking to someone that wants to steal your money. That is not me. I never engage in any sort of private message, to make sure that the message is very clear and to make it extremely easy for people to understand that they're being scammed. Let's move on with the 4 hour, because in here is where I think there's the key to understand as well if the head and shoulders can be invalidated. Let's look at what's going on at the moment in this channel down. We are seeing some sort of bottoming formation in this action of the RSI in here. This is not an inverse head and shoulders, but is a bullish pattern indeed. There is some sort of double bottom mixed with an inverse head and shoulders, which for me works as a bullish pattern. I wouldn't trade this, but it calls my attention because it could push the price into the resistance. And if we manage to close a 4 hour resistance with a candle close, we could initiate another move up. It will be really crazy and really annoying at the same time, because think about what was happening in here. We have an impulsive move and then sideways on the 4 hour. And if you look down, you can see that roughly around here, we are entering into the weekend. And it was on Saturday at 9 p.m. that we started pushing up into the second leg up. That move ended on Monday. So wouldn't it be extremely annoying that the market is showing us these head and shoulders, and at the end we end up breaking out in here? And please don't be confused. I'm showing you two hypotheses. One hypothesis is that this breaks out and confirms a candle above the resistance, in which case it could present an opportunity to go long from there. And the second opportunity is if the head and shoulders completes the pattern and confirms a breakdown below the neckline. Some people get really confused after the end of the video because they think I'm telling you it can go up, it can go down. In practice, that's what I'm telling you, but there's more to it, right? There's a confirmation to pick one side and there's a confirmation to pick the other side, and there is additional information coming in the rest of the video to support more one than the other. Unfortunately, people get disappointed because at the end of the video I will never ever tell you go on buy, go on sell, because that doesn't work like that. Even if you tell someone the right direction, they might do it wrong. They might enter too early, they might place the stop loss wrong, they might close it too early. In the end, it's your responsibility, and I'm just gonna make sure that I'm guiding you in the right direction to find data that is useful for you to make the decision. I hope that's still valid for you. On the daily, we had this breakdown in here that broke below two trend lines. The first trend line is formed by the first top and the second top, and the second trend line touches 3 points: the second top, the third, and the fourth. And you can see that this move down on the daily broke back in the previous range on both trend lines. And now the daily is pushing back up just above the first trend line. So we are kind of in the middle there. We really need to pick our poison and decide which trend line we want to use to decide whether that was just a fake out or if we are still gonna think that this was a breakdown and we're gonna trade it in this manner. Looking at past performance of times when we were at extreme levels of RSI and assuming this expectation that there are diminishing levels of momentum that we reach with every new high of the price, you can see that in here we went down and then we have a dead cat bounce back to 85. Same kind of expectation there is in here, and in number 3 the same stance. So when we look at this one, we should be expecting something like this and then continuation to the downside. Of course, that is momentum, that is not price. Price can produce various divergences in those moves and continue higher. I guess the detail is how high this can get or if it can really go back into 85. In my opinion, this has lost momentum and it needs to cool down. We are at extreme levels of open interest, and it seems that the 29 billion is going to be the top of our new range, just like we did in here with 20 billion. That wouldn't be necessarily surprising because the areas that we were marking before, they were also spread away by 5 to 10 billion, and this could be defining our new range. Now, we still don't know what's gonna be our low, This could come back down, reset there, and continue oscillating something like this. Or we could continue in banana zone and maybe 29 billion is not our top. But we need to find that top and we need to find that bottom so we can potentially benefit from the oscillation that we had in here, which pretty much hold every top and every bottom. So there is an interest from me on continue to pay attention on this to see if we can use it for future alpha. And the big news today, I will say, is not the head and shoulders. The big news is this distribution that is starting to break above the ratio of 1. And I was expecting that by the close of the day, this was going to cool down, just like we did with these two tops, that at some point they were very high and they cooled down to 69. If you are new to this indicator, it's called the Big Well Explorer. It's tracking on CryptoQuant deposits versus withdrawals from wells. And a ratio above 1 means that there are more deposits than withdrawals. It's just a ratio. And of course, we are not as close as we were at 73.5, which was an obvious distribution, or in May and in July. We are at similar levels than in January or in November in 23, I will say. And you can see in here that we still go up. And that is thanks to, although having a spike in here, very quickly, large wells start withdrawing again, contributing to the overall accumulation period that we have in here. So in other words, we can afford a move up above the ratio of 1, sure, but then we need to come back down in here and end up having a period like this of accumulation rather than a spike into the top and staying above 1, because that's definitely something that Bitcoin doesn't really like, and it can have the effect of putting Bitcoin in a long period of sideways, or it can just collapse Bitcoin like we can see at the top of 2021 2 times in a row. Long-term holders are not really acting like long-term holders in the past few days. They're not necessarily selling like crazy, but they are acting in a very sneaky way in here because they are distributing by small chunks as the price goes up, and that hasn't slowed down any single day this week, which is starting to become a little bit more concerning. Of course, they are selling into short-term holders. It's not enough to call for a top of the market, end of the bull market, or anything like that, but as a swing trader with that context in mind, it could be a little bit spooking some investors. And you can see that with the definition of the head and shoulders, we have a few people getting liquidated big today. During the afternoon, we have 3 liquidations of longs. And then with the push up to 89, we got someone liquidated with 5.5 million, continued by a long liquidated at 88.9. It's incredible how tight they are putting their stop losses or account liquidations. These people, they must be making more from their wins, and maybe those losses are not really matter that much. Who knows? If you're one of those, let me know in the comments. And on the scalping chart, after the breakdown from this level in here at 90k, you can see that price really didn't want to go to 85. I think on the live stream, I was talking about this price movement in here, not really looking like a sharp move wanting to go down. Instead, it was rolling up. Let's have a look at the liquidity on the longer term. This morning we talk about the 61, which is also very visible when we look at CoinGlass in here with 85 million. We're gonna leave that out of the game because it means a crash of 30%, and I think we need a huge incentive to do that based on seasonality. I think it's doable in March, May, those months, but in November it will really need something big to make such a big move. 72 has this level in red, overlapping with the CME gap. We don't have a lot. Most significant level below the price is 84.5, followed by 80.5. And above the price, you can see that we have still this red, which at the moment it's getting very close to the price. And one of the incentives that could be helping for this move up is the introduction of these liquidation levels that we didn't have this morning. These are shorts that are planning to trade the head and shoulder in here, that are putting the risk in here, and they have made probably larger the red levels. This incentive in here might help the 4-hour breakout possibly make it more easy to achieve. I think it's very decisive, this candle that we have in here. Let's go back to the 4 hour. You can see that is a big green candle. If this candle that closes in 1.35 minutes closes like this, then we no longer have a head and shoulders, in which case the new liquidity that has been formed by all the people aiming to trade the head and shoulders could be the reason why it's getting invalidated. And this morning we were talking about the delta. We were talking about the delta breaking below this trend line, and it seems that that is currently happening. Being so low, the delta in here, causing a breakdown, could be helping at the moment for those longs to take advantage. Excessive shorts never help. And the problem, people, is that many are trading the head and shoulders from the wrong area. One option is to trade it from 90K, but you have to have a place where you put the stop loss. So if you enter from 90 and you put the stop loss in an area where you think it's invalidated and you take the loss, that is fine. But some people are entering in here when they saw the move down and they're not waiting for confirmation. The most conservative approach, of course, is to wait for the pattern to complete. If you trade the 90 with the stop loss above, you are taking an assumption that the head and shoulders will complete. And in this case, chances are increasing that it won't. It's also very important that we look into this chart not on CME. I didn't realize, but I was looking at the candles on CME, and CME is a lot more exaggerated in here. It's showing a price of 91.5K when indeed we are still at 91K. But still the proportion is showing that this head and shoulder might just fade away. From the point of view of the bidding and asking, at the moment, people are placing big ask liquidity. They are wanting to sell this move up, and that is the only reason at the moment to have some hope on the head and shoulders. In the morning we were talking about all the bidding that was occurring in here, and we say that that was definitely going to help the price to hit 91K or closer to that, to help forming the top of the right shoulder. And then when it came back down to complete that shoulder, some heavy bidding came back, producing a higher low and now a higher high. But notice that now in this whole move down, this is the first time that the ask liquidity is coming in heavy. The last time that that happened was in this candle in here, and then in the second candle it went so high that ended up putting a top. So this is still not as high, but it will be good to monitor it if you are in a trade. This chart, the link is in the description, but in order to use it you need a subscription with high block capital. Price at the moment is attempting for the third time to break above the top resistance of the CPR monthly, which is located at roughly 91K. That is extremely bullish price action that we have had for November. Make sure that you don't miss my update in the morning about altcoin season, USDT dominance, and total 3, total 2. It's very, very, very important information and insights about how the mechanics of these three elements operate to understand how an altcoin season works. Some clarification for the people that might get confused and haven't seen videos from the past. When you enter an area of excessive shorts on this trend line, we call it that we enter in a good area to long, and we use this as a backup to look for longs. Then after we identify that area, we look for other elements to overlap with this. You might find that in my videos we find multiple elements. Many of them are calling for something bearish and some of them for something bullish, and personally I only take very high quality trades, and the definition of that is a trade where I see momentum in a full extreme, a breakout of high quality supported by information coming from other sources that are supporting in that direction. I can afford a few of them being against the trade, that is fine, but I want the majority of the things in my favor, and then I enter and I follow the plan as defined as the beginning. Of course, not not every day we're gonna have the chance to find such a trade. And in the days where something is not as obvious, we are still gonna take advantage of, one, knowing everything that is going on and learning a lot of new things as well. Hopefully, many of these things are gonna become part of your own arsenal to trade and make you better as well. And guys, if you're looking for an exchange to trade, have a look at the description. I have 3 excellent exchanges that I use myself. Bybit and OKX are the most recognized. They have huge liquidity. OKX is amazing for trading bots. Bybit, I use it with my own trading bots as well. And if you're looking for an exchange that doesn't require KYC or VPN, consider using bluffing. You can create as many accounts as you want and trade from anywhere in the world using leverage, trading all coins. And I guarantee you one thing, if you pick any of these exchanges using the link in the description, you're never going to find anywhere else larger discounts than in here. That is guaranteed. Thanks for watching, and remember, tomorrow's update is in the Trading Parrot in the morning. I'll see you tomorrow. Bye bye.